In this video, we'll look at how Netflix became a prominent streaming platform, what went wrong, and what might happen in the future. Before we begin, please remember to like and subscribe for more material like this. Let's get started with the video now. Mark Randolph and Reed Hastings founded Netflix in 1997. Its origin story is quite interesting. Reed Hastings was irritated one day when he was charged $40 by Blockbuster for returning a VHS tape late. He believed that as a mathematician, computer scientist, and entrepreneur, he could design a better way. Later, as Reed was carpooling with Mark, they were both praising Amazon's success. They talked about their own ideas for shipping products through the new internet. They believed that VHS tapes were too fragile and pricey, so they opted on brand new DVDs. After a modest test run of delivering DVDs to themselves, they decided to pursue the idea, and Netflix was created, and the company swiftly developed. Netflix approached Blockbuster with a $50 million offer in 2000. Blockbuster, though, laughed them out of the office, assuming it was a prank. The Blockbuster CEO thought the dot-com craze was overblown. However, Netflix continued to expand. Later that year, in 2004, Blockbuster recognized their mistake and quickly created their own DVD rental service. Unfortunately, Blockbuster's demise was due to poor management and huge company debt. As high-speed internet became more widely available, Netflix shifted its focus to online streaming in 2007. This proved to be the ideal choice, and the company's fortune skyrocketed. We should recall that in the late 2000s and early 2010s, the streaming platform model for watching television and movies at home was deemed revolutionary, and Netflix was at the vanguard of this revolution. They were the first and only massively successful platform for streaming TV series and movies from a wide range of studios with a long head start. There was enough high-quality content available that customers were willing to pay for it. It was a terrific deal to pay $8 per month for Netflix versus $50 per month for cable. It truly felt like a new era of media consumption at the time. Netflix's business model was so effective that it altered customer attitudes. Free-to-air advertising-supported content became intolerable. In comparison, bloated and paid television firms that formerly had a monopoly seemed archaic. Netflix continued to expand and spread its wings quickly. It was available in the United States, Canada, Latin America, and the Caribbean by 2010. It had found its way to the UK and Australia by 2012. Original programming such as 2013's Orange is the New Black, House of Cards, Black Mirror, and subsequently Stranger Things quickly followed. It absolutely cannot be overstated how exciting this moment was for consumers, particularly those living outside of the United States. Netflix was an unparalleled polished product. It's a remarkable success story given that Blockbuster was formerly Netflix's main competition. Whereas one corporation welcomed change and spearheaded a disruption movement, the other failed to adapt. Before long, Blockbuster had gone bankrupt, and Netflix had become one of the most profitable firms on the planet, with a worth of $306 billion. You can't be innovative and effective for long, though, before others notice your idea. This is exactly what began to happen by the late 2010s. Initially, the competition came from similar companies, but before long, the giant corporations decided to enter the fray. Corporations with seemingly limitless finances have begun to put out their own streaming platforms in recent years. Apple TV Plus, which costs $5 a month, focuses on premium content. In addition, for $5 per month, NBC Universal's Peacock stole numerous US sitcoms away from Netflix. HBO debuted HBO Max for $15 per month and wowed critics with new series like Succession. Disney, which is probably the biggest IP monster, introduced its own Disney Plus service, which took away all of the surviving memories from Netflix while also providing original content from the Marvel IP and other TV series and movies. It costs $12 per month for everything. In comparison, a normal Netflix account currently costs around $16 per month, making it one of the more expensive options. We'll be discussing how this is affecting the company later, but at this stage in the story, all of this new competition is hurting the company. By the way, if you've made it this far into the video, please leave us a like and subscribe to our channel as it'd be greatly appreciated. Now let's get back to the video. Netflix was still number one and was set to win big because of a tremendous event coming out of China. Despite its competitors, Netflix went through a tremendous increase in subscribers during the early stages of the pandemic. People were stranded at home and everyone was talking about Tiger King. Netflix then gained tens of millions of additional customers in 2020 and 2021, establishing itself as the king of stay-at-home stocks. Even in the middle of 2021, Netflix was still accumulating customers, but this would soon change. As vaccines became available and the pandemic receded, consumers were no longer confined to their homes, and Netflix faced a problem. People had spent over a year sampling everything that each service had to offer, and they were now informed well enough to decide which ones they wanted to keep and which ones they wanted to get rid of. The rising quality and quantity of competitors, the poaching of IP from Netflix, and a slowdown in subscriber growth could only mean one thing: Netflix was about to face a reckoning. Netflix's investors abandoned the company in large numbers in mid-April 2022, after it was announced that the service had lost 200,000 customers. The original prediction was for a 2.5 million increase. Netflix lost more customers in a quarter than it acquired for the first time in a decade. The announcement came as a surprise, and the stock price dropped by 35% right away. Overnight, the firm's valuation was reduced by $50 billion. Fearful investors began to wonder, has Netflix peaked? Netflix had lost more than 70% of its value since its peak by the end of April 2022. Some Netflix shareholders are enraged. In fact, some stockholders are so dissatisfied with the streaming service that they have filed a lawsuit against it. They contend that Netflix's management deceived them about the company's financial prospects. Netflix has blamed subscriber losses on a variety of factors. They mentioned rising competition, individuals returning to work, the company's exit from Russia, and the household password sharing as reasons. Of course, these are all legitimate explanations, but they are far from the entire Netflix narrative. When competing platforms are pushing new boundaries, Netflix cannot rely solely on brand familiarity and lazy consumers sticking with what they know. Netflix has a lot of content, but combing through it and discovering the jewels is becoming more difficult than it should be. When Netflix first launched, its original material was impressive, but it now appears that less of it is being produced. Furthermore, people are getting tired of their favorite series being cancelled after 1 or 2 seasons. Other criticisms include a recent concentration on more politically charged content, which normally doesn't perform well in any medium. Netflix's pricing approach is also exacerbating the problem. Price rises are becoming increasingly common. A typical Netflix account, for example, was only $9 per month in 2014, and now it's currently approaching $16, making it unaffordable for many people. Consumers have less money to spend on entertainment as inflation and interest rates rise, and Netflix is at the top of the list of things to cut. It's possible that we're in for a streaming crash right now, similar to the 1983 video game crash. Perhaps there are simply too many options, spreading consumers thin and producing a saturated market that cannot be sustained. Having said that, there's a good likelihood that Netflix has just outlived its usefulness. It has reached its top in terms of profitability, and any further improvements to boost it will result in more subscribers leaving. Whatever the case is, it will take time to play out. In an ironic twist, maybe in the distant future we'll be talking about Netflix in the same breath as Blockbuster. And that just about wraps today's video. Again, don't forget to click those like and subscribe buttons before you go. See you in the next video.